Hi everybody, welcome to T.U.B Investing YouTube channel. It has been a long time since I made a video because I've been very busy. The slides you see today is actually done in the earlier week of October, but I've only been able to make this video near the end of the month of October, right? So that's how busy I've been at work as well as doing other investment, as in looking through my equity portfolios. So anyway, without further ado, let's talk about today's topic, which I want to go through is the recovery stocks. I mean, people have been looking at recovery stocks so I've done up some pointers to look out for recovery stocks and which one is the chosen one that I've invested in. So just some disclaimer, whatever I talk today is just my opinions. So if you are interested in the stocks or any of the factors that I talked about, please do your own due diligence and your own research. Thank you, and let's move on. So before I continue, if you are interested in my channel, okay, please subscribe to us, comment or like this video, okay. I just want to try a different style of recording today, so I'll do this in a PowerPoint slides. So if you like this, please give it a thumbs up and smash the subscribe button. Thank you very much, and let's move on. So the points to take note is that for recovery stocks, if you are interested, right, you should actually go for the sector that has been hit the hardest by the pandemic, because the one that's hit the hardest will recover the fastest. That's one of the pointers that you should take note of. Big companies will also recover faster. I mean, if you look at how a bigger company will have a better balance sheet, more cash in order to pay off their operating costs and stuff like that. So they'll be able to recover faster. And also the stage of supply chain matters, right? So if you compare Boeing and Delta Airlines, Boeing may have orders come in, but the revenue that's going to earn will come in maybe years later. But Delta Airlines is a service, it's giving a service, and the revenue will be earned immediately. So that is why the stage of the supply chain, the company is in the supply chain matters. So the fourth point is actually the cash is if a cash-based business or consumer-related business will be actually recover faster, such as Walmart. Restaurant will also recover faster if once the pandemic is over and there's a vaccine, right? The restaurant open up, right? People will go into restaurants to actually have their meals, right? So that's one of the business that could probably recover faster. So the next point is company that provide services will recover faster than companies that manufacture. For example, Microsoft versus Ford, right? Microsoft produce a service, so I mean we can go online and we can just buy a service immediately, right? And then we can enjoy the service and we will pay, and Microsoft will earn the revenue. But if you want for companies that manufacture, there'll be orders coming in, yes. Once they will announce that there are certain orders, maybe share price will spike a bit, but after that it will die down because the revenue doesn't come in immediately. It will take some time before the revenue comes in. So companies that provide services will recover faster than companies that manufacture. So basically what I'm talking here is that you see the above, right? I'm talking about cash collection cycle, right? So if a company has a shorter cash collection cycle, you will perform better and recover faster than one that has a long cash collection cycle. And one example is a restaurant, right? The last point I want to take note is I want to inform you guys is that due to the volatility ahead, right? The US elections, the vaccine, we don't know when it's going to come, and probably a second wave, and then this stimulus that in US that has been delaying, and continue bankruptcy, companies that's going bankrupt, right? So there's potential risk ahead. So it's necessary to look at this in a shorter term range. I mean, look at recovery stock from a shorter term period rather than a longer term period. Shorter term period could be 3 months to 1 year, because it probably should include the next annual results that is going to release. So I just want to go through the next pointer where this is my chosen company, Macy's, right? Ticker symbol M. So the chosen, this is the chosen one, and I'm going to use a SWOT analysis, a simple SWOT analysis to explain why I chose Macy. So the strengths, right? The digital sales has actually increased 54%, right? I mean, during my research, I realized that it's a top 10 e-commerce store. It's actually number 9 on the list. And it surprised me because I always thought Macy was a brick and mortar retail departmental store. And recently it has been partnering on DoorDash for next day delivery services. And their stores, which is all over US, is become fulfillment center. That actually helps their online service to do better as well, right? Because people like this kind of next day delivery services. I mean, I shop online, I know that I like this kind of delivery services. And they are also actually having this strategy where they are going to private label services. I mean, rather than private label services, private label apparels. So this will actually lead to higher margins, right? So that's where they are. That's in the long run, they intend to have at least 25% of their revenue from private label. And one of the most important things for recovery stock, the balance sheet must be strong. Okay, the point that Macy's balance sheet is actually very leveraged. Right? It has high debt, but do note that most of these debt are supported by properties, and only the short-term debt of about 500 million right now will need to be repaid. Right. So the other long-term debts of, if I'm not wrong, is about 5 billion will be repaid in the next. It's supposed will only need to be repaid, right? That in the next 2 years, as in the first point of repayment will only be in the next 2 years, and currently they only need to service interest. Despite the 4 million losses in the current 10Q, right? The cash losses in their cash flow statement only amount to 7K, because a bulk of it is impairment to their intangibles. So that is one of the main thing that I think people need to know, right? Because the cash losses is actually very little. And they actually have this ability to pivot and innovate quickly in the current situation. Okay, this I'll share a video link in the description, and then it will showcase how the CEO actually explained to one of the retail association in US to explain how they actually innovate and pivot. Okay, and they actually use they actually he actually explained that how fast they actually did it. You know, like something that is supposed to take months in the past, they take weeks or even days to just complete it and push it out to the and push it out into the system, the online system, or on their processes to improve their customer service. So that's one of the strength that I really gained from that video. Um, and in my opinion, I think they have more bargaining power than the suppliers. Some account payables, right? They can actually drag a bit on their suppliers because they are at the end of the day, their suppliers requires them more than to sell the products more than them requiring the suppliers, right? Because what if this supplier doesn't want to supply to them, they can always source for another one. So that's one of the strength that I think even as a big retail departmental store has. So let's look at the opportunities. So opportunities are short, but it's important, right? So Black Friday is coming, Thanksgiving is coming, Christmas is coming in November and December, right? So this holiday season, everybody will go out and buy. So this is actually an opportunity for Macy, especially when JC Penney has been bankrupt, and a lot of other retail outlets, actually Forever 21, Brook Brothers actually gone bankrupt as well, right? So Macy can actually take the lead and gain the market share in this at this current moment, right? So that's one of the main things that I believe there's a lot of opportunities here for Macy to grab. So what are the bad stuff, right? So the weakness is the cash still seem tight if you look at the balance sheet, and their current shares, right, has a very high short interest, as in people are shorting the stock, right? It's about 40% right now, and some of the threats is that New York City is still closed. I think Macy is the biggest environmental store in New York City, so it's still closed. And COVID second wave, right? It becomes about right. Well, I mean, if they have to close down again, then it's like they may not be able to recover that fast, right? And there's continuous competition for TJ Maxx. It's a discounted outlet in the outlet chain in US and Nordstrom. So that's another departmental store. But I will, in that sense, maybe in the future, if you are interested to for me to do a comparison between Macy and TJ Maxx and Nordstrom, please put in the comments below. So these are the threats and the weaknesses, right? So I've uh I've actually a fundamental I've actually a fundamental scorecard, right? So I've used this scorecard in some of my previous video to showcase, or even in my Facebook ad, to showcase how I analyze stock, right? So fundamental scorecard is actually a website that subscription website that anybody can subscribe to, and if you are interested more, please comment, or please comment there, and I can give you the link to the website. But having said that, I'm not trying to sell the website, sell the service through this video. Right? What I'm trying to tell you is how my fundamental scorecard talks about this company, Macy. So let's go take a look. So here is Macy's fundamental scorecard. So in the scorecard, you can see, right, there are about 4 boxes here, and then it actually, if there's a tick, right, it means that there's something good about this company. So there are no opportunities, the company health is bad because of the liquidity and the debt issue. Let me enlarge it, sorry. And then the valuation is stated as fairly valued, and there's about quite a lot of red flags, right? But let's scroll down, and I just want to emphasize that actually that the main thing that I see in Macy in my fundamental scorecard, right, is that its intrinsic value is at $12 compared to the current price. This was taken during 2nd October, so at that time the price was $5.84, right? So, but currently right now is at, if I'm not wrong, about $7.20. But there's still some differences between the intrinsic value and the current share price of $7 plus. But at that point in time, I do see this as a major factor for me to buy in. Okay, the reason why is because the valuation here is based on 6 different formulas, and the 6 different formulas will actually get certain values, certain intrinsic value for each formula, and we average it out. So it's a very quantitative aspect to the intrinsic value based on all the fundamentals, and it actually gives me a high comfort when I see that the intrinsic value is higher than the current value by so much, right? It means that in terms of quantitatively, that the margin of safety is significantly high. So that's where you can then focus on the qualitative aspect, and then try to build up the case for this for Macy, right? Which I already stated in the SWOT analysis. Just want to take a look at a detailed analysis, right? So basically, the revenue has been trending down, and because of the COVID situation, the latest net profit, there are losses, and then, but just note that the free cash flow, right? They're still positive. I also want to bring to you one of the posts in Seeking Alpha, an article basically in Seeking Alpha. This article is quite interesting because it talks about some of the things that I talk about as well, right? But one of the things that it shows that you see the total debt here is about 5.4 million as from August 31st, and that's quite huge, right? But he also say that it has cut 50% of the debt in 4 years, from 8 billion to 4 billion prior to, and then because of the COVID, they increased it to 5.4 billion by a recent by 1.3 senior notes coupon that's maturing in 2025, backed by property. That's something that I said, the balance sheet is strong because they have significant property. One of the things that over the next few years, right, I think it's good for everybody to know that they actually announced a plan of to close 125 locations over a 3 years period. So, that's Macy's plan, but I think recently, because of the pandemic and the way they use their fulfillment centers, right, they actually changed their propositions, and then they are still basically they are still telling people that during the Goldman Sachs retail conference in September, they're still telling people that they are still thinking about it and not so sure. But I'm sure they will continue to cut close to 105 locations, maybe not all at the same time. probably drag a little at the start of 2020, maybe more at the end of 2021 when everything is more in the more clear, when the situation is more clear, right? So anyway, I'll share this article in the description as well, and then you all can go and take a look and read about it. I think it is showcase why Macy is quite interesting. In this article, it also states that Macy is a high return, high risk stock. So that's one thing that I think people can take note of as well. Okay. So with that, let's come back to the slides. So as you can see here, I stated that my average share price is actually invested at Macy, and my average share price is actually $6, right? And I have a target price in between about $6.80 to $9, about there. So because I was thinking about 10% at least, 10% gain. But currently right now the share price is about $7.20 as of now, right? So I'm still thinking that because of the opportunity I've actually I also have to emphasize that I've already sold some of it at about between $6.80 to $7.20. I've just sold some of it about 10-20%. But if there is a downturn again, as in if the share price go downtrending somehow, I may buy into it again. So because I do believe that um, I do believe that there's some opportunity to be taken of during this period where the Christmas is coming, and Christmas, Thanksgiving, and people will definitely spend more because we are also cooped up right now and we want to enjoy the festive season, right? So people will spend more. So I believe that there's significant opportunity right now between in November and December, and especially if the share price fall after US election, I will probably buy into it again, right? So as you can see here, my holding period is about, for the short term, about 3 to 6 months, and when the annual results is revealed in probably in March, right? I believe uh, with more clarity in March, in February or March when the annual results announced, right? I could probably allow a longer holding period. Sorry, not higher, but a longer holding period. And one of the things I want to say is that because of short interest, right? Because this significant short interest, right? It's like spring, right? People are shorting the stock so much, right? Once they announce good results, following good results, right? People will stop shorting companies like Macy. And when there's a vaccine, right? This shorting will stop, and it's possible that the share price will will be on a very significant uptrend. So that is something that I think everybody should take note of as well, right? Because this short interest is like a spring right now. It's causing the share price to be like a spring, and when the vaccine is here, the share price will probably be rise significantly, right? So this lead me to a conclusion, right? By where I want to quote Monish Pabrai. He said before, heads I win, tails I don't lose much. It's basically describing a situation where there's high potential upside and low downside risk, right? And I think Macy is a company that is in such a situation right now. Although I have a short-term focus in this because of some uncertainty in the future, but I believe that I will actively, but actually I believe I will actively manage this position, and probably I may buy more into the future once I have more clarity about situation and may see. With that, thank you very much. Thanks. Please like this video and then allow the YouTube algorithm to share it to other people. Thank you, and I hope to see you soon. Bye.